Thank you for that introduction, Christina. Good morning, everyone. Happy to be back here for another year of single audit and uniform guidance updates. As previously mentioned, my name is Dan Merritt. I'm a principal here in our Detroit office managing local government and single audits for Southeast Michigan. You might know me from this webinar series where I do 2 annual updates talking about revisions to uniform guidance, the compliance supplement, and single audit topics. And also at the beginning of each calendar year, we do our annual governmental gap update. I am our lead governmental audit trainer for Rehmann, and you can find me at any number of professional events and conferences talking about both of those topics. We'll have some more information about where you can find us at upcoming professional associations at the end of the presentation. So today we have a lot of information to cover. I'll just walk through our session outline here, but I'm also going to talk about what my goals are for what type of information and content we're going to deliver here today on the single audit update. So today's session outline will cover what is a single audit, the stages of a single audit. Then we're going to dive in on the 2026 proposed revisions to uniform guidance, and that's going to be perhaps a larger area this year than it has been in the past. We've got a red line of proposed revisions on uniform guidance to look over and some substantial key changes that your organization may need to know about. At the end, we're going to do some areas of emphasis. We're going to come back to our topic of subrecipient monitoring. I think 2 years ago, I had this as an area of emphasis, and it's relevant again related to the proposed revisions to uniform guidance. And at the end, we're going to cover some common internal control deficiency areas. So why this type of session outline? Well, I have 3 basic goals for our time together today. The first is to make this accessible to everyone. I'm going to try to provide a basic understanding for everyone of the requirements of a single audit under uniform guidance. So that's where we'll start. We're going to cover the important areas of proposed revisions to both uniform guidance and the compliance supplement. That's where changes in governance, that's what we're going to be talking about there. Changes in what regulations might you have to be worried about come 2026 and 2027. And finally, it's always my goal when I'm doing training sessions to give practical and useful advice that you can actively implement in your organization, and hence our chosen areas of emphasis for this year. So with that, let's take a second here and do our first polling question. I'll pause for a minute, let everyone respond to that question, then we'll carry on. So let's begin with our overview of what is a single audit. So the term single audit originated in 1984. Before 1984, every federal agency had its own requirements, which meant that if you were a large organization like a city or a county receiving grants from multiple federal agencies, you could end up having a number of federal awards audits during for any given audited year. The Single Audit Act of 1984 meant that you could have one audit of federal awards instead of those potentially multiple audits each year, and that your independent auditor can now look at the guidance and say, here is how we are going to audit all of your federal awards in a way that will comply with federal regulations. So you can have this annually and know that you are covered, as opposed to having the Department of Treasury audit you one way, Department of Education audit you another way. So we're creating a single audit of all federal requirements. Single audits are governed by something called Uniform Grant Guidance, 2 CFR 200. Up until this year, the most recent effective update happened in April of 2024. That's when single audit thresholds were updated from $750,000 to $1 million. That was effective for fiscal years beginning on or after October 1st, 2024. So those fiscal years ending September 30th, 2025 and later. So if you've had a single audit for, let's say, December 31st, of 25 or June 30th of 25, something like that, you would have been operating under the new thresholds and requirements of uniform guidance. That update came out in April. It was first proposed and reviewed in April of 2024. We're going to talk a lot more about the proposed revisions to uniform guidance that are actively being discussed now and that have been redlined out by the OMB. So if you need a single audit, what are the stages of that single audit? Well, there are 4 major stages to completing and executing a single audit, which starts with determining need. Do you need, as an organization, to have a single audit of your federal awards? And the baseline test for determining need of a single audit is, does your SEFA, your schedule of expenditures of federal awards, exceed the threshold of $1 million for every given year? That means we're going to need you as your independent auditor. I need you to put together a sheet of what are all of your federal awards, which departments did they come through, what are the assistance listing numbers assigned to those federal awards, and if the total of that schedule of amounts expended, remember, amounts expended, not amounts received, during a particular year is more than $1 million, you're going to need a single audit. Which means that we, as the auditor, are going to need to test that SEFA in accordance with SAS 119, later superseded by 137, basically saying, is your SEFA fairly presented with respect to the other financial information that your organization presents? That often means reviewing grant tie-outs, making sure that the expenditures agree to your general ledger, agreeing information from potentially your financial statement audit to the information presented in your SEFA. As part of that process, we're going to need to select major programs. Remember, I said that schedule of expenditures of federal awards is listed by ALN, or Assistance Listing Number. This used to be called CFDA, Catalog of Federal Domestic Assistance Number. Could also end up being a cluster. Some assistance listing numbers fall within a cluster. So if you have 3 different assistance listing numbers that all fall within child nutrition cluster, that program all gets audited as one. Then we have to, as your auditor, divide up those programs into type A and type B programs. And the cutoff for that is the same for type A programs, so we call those the large programs, is the same as the cutoff for requiring a single audit at its baseline. So if you have over $1 million in expenditure of federal awards in total, you need a single audit. We're going to start cutting up those programs into type A's and type B's. If you have individual assistance listing numbers or clusters that are over $1 million, those are type A programs. And then if you have programs under $1 million, those are type B programs. The type A programs are the ones that your auditor will address first. And so as we are assessing type A programs, we look for 2 major factors. Are those type A programs that are potentially not low risk? If they are not low risk, sometimes we call it high risk, but the guidance says not low risk, then they have to be major. Then we're going to potentially set aside those low-risk type A programs and decide if they might eventually become major. On those type B programs, we would assess them only if there are low-risk type A's. So if all you have are large programs that we haven't tested in the last 2 years or had material weaknesses prior, etc., we're going to end up testing those type A's. If you have low-risk A's, we're going to end up needing to test potentially some type B's, or at the very least, we have to assess risk on those type B's. We split those into larger type B's and smaller type B's. We call those informally at Rehmann B pluses and B minuses. If you're a larger type B, you're B plus. That threshold is 25% of the type A threshold. That used to be 187.5 when the threshold was $750,000. Now it's $250,000 with the threshold for both single audits and type A's moving up to that $1 million. Higher risk programs could be selected as major. This is where we get into auditor judgment. Your auditor is going to walk through the list of risk factors as designated by the OMB and make some judgments about if we decided we needed to assess type Bs. Do you have any larger type B programs? Are any of those particularly high risk? Would we need to expand our major programs for testing, right? Because we have to figure out, we have to narrow our area of focus down to those things which we consider major programs, and we're going to test those specifically. So if we've done our risk assessment, we've separated into type A's and type B's, and we've looked at risk for those type A's and type B's, then we're going to say, okay, now that we've assessed based on risk, have we got enough coverage on the whole CIFA? Are we testing enough major programs to test 40% of your CIFA? We can knock that number down from 40% to 20% if you are a low-risk auditee. And the rules for being a low-risk auditee are kind of similar to the rules for having a low-risk type A program. That is, that if you've had a clean single audit for the last 2 years with no material findings and you filed on time with the clearinghouse in the last 2 years, you're, among a couple of other things, you're probably going to be a low-risk auditee. We don't necessarily have to test as much of your CIFA. We get less, we're allowed to have less coverage. Similar rules apply to type A programs if it hasn't been tested in the last 2 years. If you had material findings in the last 2 years, we would have to end up testing that program again as high risk or not low risk. Again, we might select additional programs just to meet coverage if we think that nothing is particularly high risk. It becomes kind of the auditor's choice at that component. At that point, we need to start our testing. So this is where you start to have, as a client, as an organization being audited, you start to have more interaction with the auditor. Up until this point, all you've done is deliver your CIFA. Now we're starting to ask you for individual line items of testing support. So this would be for each major program, we have to determine which compliance areas to test. We're going to select those those compliance areas subject to audit per the compliance supplement, which I'm going to talk more about later. We're going to decide which of those areas are directly applicable to the auditee and might have a direct or material effect on compliance. Those compliance areas are as follows. There are 14 potential compliance areas. They go from activities allowed or unallowed all the way through special tests and provisions. And so we have to review in conjunction with the compliance supplement which of those areas are applicable to your major programs, right? So if you're thinking about the selection process, we've gotten a CIFA, we've decided what major programs to test. Now we say, okay, of those major programs, what compliance areas must we test? The compliance supplement will usually give the auditor what they call a pick 6. Sometimes it's a pick 7 if they're counting both allowable cost principles and activities allowed or unallowed as 1. We'll give 6 focus areas to the auditor, and we'll start asking you questions about eligibility, equipment and property management. We'll begin to test those particular areas. Once we complete the testing and fieldwork component of a single audit, then we need to report on that single audit. So, well, what are the required components of the report? Well, I mentioned at the beginning, under determined need, we have to make sure your CIFA is complete and accurate. We do that with an in relation to opinion on the CIFA. We say it's properly presented with respect to all of the other information presented in the financial audit report. That kind of cleanly segues into what we call the Yellow Book report. A Yellow Book report is required because if you have a single audit, you must have a Yellow Book financial statement audit in conjunction with that single audit. We call them Yellow Book audits because the GAO's book on government auditing standards is quite literally a big yellow book. So the informal term over the years has become a Yellow Book audit, and that means we have to put out a transparent, publicly available report on internal control over financial reporting and compliance with laws, regulations, and grant agreements. So findings, other things along other matters for those charged with governance are going to go in that Yellow Book report. They're going to be part of your actual audit report, not just in the letter to those charged with governance. Your single audit report is going to include an opinion on compliance for each major program and internal control over compliance. Sometimes we call this the uniform guidance opinion. It's because we're talking about, did you comply with uniform guidance? Did you have internal control over compliance? So not just did you meet compliance requirements, but did you have an appropriate system of internal control operating to make sure that you were compliant? That you had control activities in place to manage and monitor compliance. As we finish up that report, we're going to include in that report a schedule of findings and question costs. When we're talking about reviewing a single audit report from the top down, this is an important page. You can usually find it in the back of your single audit report because it's kind of a one-stop shop for how did the audit go. In this schedule of findings and question costs, you'll find the summary of auditors' results. So we put in some check boxes as required about did we have material weaknesses? Did we have significant deficiencies? So not only do we report on your federal award findings in that summary of findings and question costs, but also those financial statement findings that would have been included in that yellow book report. So it's a great one-stop location when you're talking about your audit with external stakeholders or with the board of how did we do this year. Additionally, in a uniform guidance single audit, your auditor is required to report if there were questioned costs known or likely in excess of $25,000. That would also be noted in that schedule of findings and question costs. Remember that auditors, independent auditors, do not disallow costs. The granting agency disallows costs. But if your auditor questions costs, that's the first step towards having communication with that agency about should those costs be disallowed or not. Even better, in that single audit report, you're going to have a summary schedule of prior audit award findings. So what were the previous findings in the single audit and yellow book reports? Were those findings resolved? This gives readers of the financial statements a really good idea of not just what was this year's results, but what were last year's results, and were those issues remedied appropriately. The final component of a single audit is submitting a data collection form. And this is how that information becomes transparent and publicly available beyond your local government, your not-for-profit, simply making that information available on your website, right? That's, of course, often best practice, sometimes required by the state or regulators. Sometimes it's the board's decision because they want it to be available to stakeholders, showing that they're managing money responsibly. But if you're getting a single audit, it's going to be available on the Federal Clearinghouse. That's due 9 months after your fiscal year end. That data collection form provides all of the detail in one summarized place on findings. You're required to submit a corrective action plan for ending findings to the clearinghouse along with that data collection form, as well as the complete financial statements for public inspection. So not just your single audit report, but your financial statements are going to be available for public inspection if you receive a single audit in any given year. So with that, I think we're on to polling question 2. So I'll pause for another moment here, let everyone respond to that. So now that we've given a brief overview of what does a single audit look like, what are its stages, what is your auditor doing when they're asking you for all of that information, and how does that report present itself at the end of the audit, let's talk about the uniform guidance that single audit is performed under, and what some of the changes are for this potential changes are for this coming year. So This year, the Office of Management and Budget, who is responsible for administering the compliance supplement and uniform guidance, released a red line on May 29th of proposed changes that they would like to make to uniform guidance. These would be proposed to be effective for awards issued on or after October 1st of 2026. So just like that proposed revision in 2024, we would expect likely that these revisions would be effective for audits September 30th of 2027. Now, there's a wrinkle in that proposed deadline. The Senate Appropriations Committee here in early August passed a continuing resolution or CR that would postpone the effective date of those revisions to uniform guidance that we're about to walk through till December 11th of 2026. So sitting here right now, I can't tell you exactly when these revisions would for sure be effective. Though that continuing resolution needs to be adopted by the House. The House doesn't come back in session until the end of August here, so we don't know for sure the status of, will this be effective October 1? Will it be delayed to December 11th? Will the House suggest a revision that pushes it off even further? That's all very much still under negotiation. As of the end of the comment period, on July 14th, regulations.gov reported that the OMB had received 496,606 comments on proposed uniform guidance. So if it gives you any conception of the amount of attention that these proposed changes are receiving, that is, at least in my knowledge and recollection, a record for comments received by the OMB on a proposed change to uniform guidance. The proposed revisions have three stated objectives per the OMB: improving transparency, accountability, and oversight, clarifying the regulatory status of the 2 CFR 200 text. Remember, uniform guidance, 2 CFR 200, those are the same thing. It's just the codification of the Federal Register. And reducing award recipient burden. Now, along with this proposed change in uniform guidance, we also have to talk about the compliance supplement, which is technically an appendix to uniform guidance. The compliance supplement gets released every year, and it tells auditors exactly how to manage those audits for the upcoming year, right? So remember, I talked about which compliance areas you could have reviewed for a major program under our overview of a single audit. The compliance supplement is the thing that helps us as auditors walk through each of those potential major programs and decide what is applicable or not applicable and what that federal agency would like us to focus on or test. The OMB really is supposed to release the compliance supplement every May. As of right now, we still have no 2026 compliance supplement, which means that auditors currently cannot issue single audit reports. So the Government Audit Quality Center from the AICPA puts out alerts regularly. We're a member of the Government Audit Quality Center here at Rehmann. Alert 502 specifically stated, which is the same thing that happened last year when the compliance supplement was delayed, that auditors should not be issuing single audits until we have a final compliance supplement for 2026. This applies to all single audits for June 30th, 2026 and later. Does that mean that we as auditors are just closing down shop, not doing anything for single audits? Absolutely not. We are currently performing single audits for 2026 and later. We are using the 2025 compliance supplement and the related applicable uniform guidance for performing those single audits. We're going to take them right up to the finish line for our clients, but then we are not going to be able to issue those reports until we see a final revised compliance supplement and understand if we need to come back to clients, ask any more questions, revise what we've been testing. So within uniform guidance, there are a number of key changes. I'm going to talk primarily about the key changes under audit and compliance, though I understand that those that may receive the most attention from administrators and those managing grants are perhaps the first two that we're going to cover under grant program operations. So key changes here under the proposed revisions to uniform guidance. There are some potential changes to pre-award merit and risk reviews that might make those reviews more subjective. The selected awards could potentially be reviewed by what is termed in uniform guidance as a senior political appointee. The review factors might include agency priorities, applicable laws. There's a stated terminology of national interest in the proposed revisions. That also empowers federal agencies to review based on organizational affiliations or what they determine to be questionable practices or financial capacity. Many of those key terms, including affiliations and questionable practices, are not clearly defined yet in uniform guidance or in the proposed revision, so it leaves open a lot of judgment as opposed to specific defined regulation under the new proposed process and revision. Could cause delays, potentially less predictable award decisions. Means that the theme throughout my presentation here today is going to be on document, 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 right? I can't tell you how these reviews are going to be performed. What I can tell you is focus on the basics, focus on your compliance, try to document all of your decisions as best you possibly can so that you can defend those decisions should you find yourself in a merit or risk review. Additionally, this change in uniform guidance opens up something called discretionary terminations, meaning that if you're subject to one of those merit or risk reviews, your competitive grant can be terminated even during the award if no longer aligned with agency priorities or the national interest. An agency could evaluate the awards using criteria that is different than those when the funds were first awarded. So it might feel like a little bit of a bait and switch at times because you might have received the award under one set of priorities and one set of criteria, and then you're evaluated for risk review under another set of criteria. That's just the potential proposed change. Protected programs do include, so there's safe harbor for a few areas, including formula grants, block grants, and disaster recovery grants. So good news on some minor fronts, but it does mean that these proposed revisions would give federal agencies the discretion to terminate under one of those merit or risk reviews. I think that these two areas are probably why OMB received 496,000 comments, more than potentially the audit and compliance changes. However, today I'm going to focus primarily on what those changes are and as they apply to uniform guidance and what things can you do to try to operate a clear and concise system of internal control and manage your organization as best as possible, right? We're gonna focus on the basics. We're gonna control what we can control. So one of the changes for audit and compliance is that uniform guidance is becoming regulation. While that doesn't change the substance of uniform guidance, it does mean that it's potentially binding more quickly across federal agencies, whereas in past uniform guidance revisions would go through a two-step process of review before they became effective and binding for that particular agency, and potentially the agency had some discretion and flexibility among implementing certain components of uniform guidance variations. This would make all of it all at once apply immediately. So you potentially providing more uniformity, but less federal agency discretion by becoming regulation. There's also a refocus on subrecipient monitoring. So in these changes to uniform guidance, there are some specific items. We're going to talk about each of these for a moment here, and then we're also going to talk about what controls you can put in place to operate a good system of subrecipient monitoring. First, you have to consider all downstream entities to be either subaward or contract. There's no more having downstream entities where there's nothing in writing, right? You need to be, they have to be a subaward, they have to be a contract, can't be an informal relationship. Second, internal transfers to related agencies, related entities. I'll talk about this in a little bit more, but if you're transferring money to potentially a component unit or a related local government, that's now got to be a subaward or subcontract, not just, oh, hey, we made a transfer to this organization through a board approval or something along those lines. Subawards and subcontracts must be logged in SAM.gov. So it's going to require you to basically do an inventory of all your subawards and contracts and log all of them in sem.gov. Requirement to ensure that activities do not cause, quote, reputational harm to the recipient or federal agency. Again, we don't have a clear definition of exactly what that means, but it is in the new proposed guidance. Non-compliance is grounds for termination. So there, again, this is where that sort of compliance really comes into play, where in the past you might go through management decisions and they might disallow certain costs. Now they're saying if you don't comply with subrecipient monitoring requirements, they could terminate your entire award or your entire grant based on not just your actions, but the actions of those sub-awardees or sub-recipients. So more monitoring, more documentation, greater exposure to findings and question costs through the sub-awarding process. Another area of compliance that's going to increase requirements on recipients of federal funding is the eligibility verifications and payment justifications. All entities receiving awards are going to have to go through Treasury's do not pay system. Recipients and subrecipients are going to have to use E-Verify to confirm eligibility of employees and contractors working on federal grants. Federal agencies will verify those eligibility of payees for all federal awards through that do not pay system. So as you're thinking about complying with new uniform guidance, you're going to have to consider, how is my organization going to manage our E-Verify system? How are we going to comply with the federal do not pay system? Making sure that our payments and awards are properly going through those systems is going to be an area of work for organizations that now need to comply with uniform guidance. There are also some revisions to cost principles and allowable costs, and I'm going to focus on a couple of areas here that were previously potentially allowable costs and maybe now are either going to get more scrutiny or be expressly disallowed. So publication costs are now generally unallowable under uniform guidance revisions unless required by state or statute or specifically approved. Conference costs are allowed only if expressly approved and included in the award terms. Advertising and public relation costs continue to be largely unallowable. That's maybe not a substantial change, but it is important to note. Commencement and convocation costs, if you're a higher education or K through 12 organization that had some part of your commencement or convocation costs covered under federal awards, that would no longer be allowable. Costs related to elective abortions remain unallowable, and fundraising and investment management costs require prior federal approval. What does this mean for your organization practically? It means that you're going to have to take an inventory on your grant budgets and your grant spending and think carefully about, do we have any costs in these particular areas which we either need to remove because they're unallowable now, we need to get pre-approval for fundraising and investment management costs, or we need to scrutinize really carefully. That would be your conference costs that, especially if those are conference costs, I would think the highest risk ones would be if you're sending people out of country, that's going to be a higher risk area when it comes to the federal government and your independent auditor scrutinizing your award costs under new potential uniform guidance here. There are also some changes to audit guidance frequency, and the internal control framework. So in the proposed revisions, we would potentially no longer get an annual compliance supplement update. Now, that may not mean a lot to you as an auditee, but as an auditor, this could have potential impact on how we choose to or how we have to comply with our requirements to execute single audits. I think where this will impact organizations receiving single audits is, let's say there is a compliance supplement revision by an individual federal agency. So we're no longer getting an annual update from OMB, right? And we're getting an individual update from a federal agency, and they decide to do Treasury's update in September. Well, if you're in the middle of getting a single audit and Treasury decides to update it and make it effective immediately, we potentially could have some issues with having to go back and revise our compliance procedures. So there is a timing and process concern around how would we get annual updates if not from a regularly released compliance supplement. Second, the revision removes GAO's standard for internal control in the federal government. We call this the Green Book. Well, it's green. We like our colors in books here in government accounting as the required framework of internal control. Now, I want to specifically note here, it's no longer the required framework, but as auditors, as trainers, we're still going to be talking about this internal control framework. And you better believe that when I'm talking about internal controls, I'm going to be using information from the Green Book and from COSO to help you understand what a good system of internal control looks like. Just because it's not the required framework for single audits doesn't mean it's not still best practice and not still a good way to create principles and evaluate having a well-designed and documented system of internal control. We're going to get into here in a minute some of the audit implications. Again, I previously mentioned this potentially could be effective as soon as September 30th, 2027 for single audits. But as we get through this, I want you to think about three things. One, be careful of changes in costs and cost principles. Have a carefully documented and executed subrecipient monitoring program. And when we get to the internal controls section where we talk about internal control deficiencies, document, document, document. I want to also take a moment here and talk about not just internal controls. We're going to talk about internal controls because I'm an auditor. We're here talking about compliance. Document your decisions. And going back and thinking about discretionary terminations, program reviews. If you say something, let's say it's a person needs to go out to another country to do a conference, and that's going to be a high cost. Remember, we're talking about changes in cost principles. Boy, there better be a memo explaining exactly why it has to be that conference and why you're sending those people and why that applies to those grant activities. That principle should be expanded to everything that you're doing on federal grants. Put in a system of internal control that documents all of the decisions you're making about charging what, providing what services, why you think that's allowable. Under this new set of potential revisions, I see it as having more risk to the recipient, more risk of review, more risk of disallowment. The more you document, the better situation you're in if you do get to one of those discretionary reviews. Again, you also have more responsibility for subrecipient monitoring. We need to have a carefully documented and executed system of internal control for subrecipient monitoring. Finally, we don't know much about the draft of the compliance supplement for 2026. All we know is what we've heard from the AICPA. One thing that we do know about that draft of the compliance supplement is that they've revised the higher risk table in the compliance supplement appendix. They've removed things. They removed last year the FRF from the higher risk table. They removed the abandoned mine land reclamation project. They added the child care cluster and the temporary assistance for needy families cluster. So you can see this is probably aligning with administration priorities where they're saying the things we think are higher risk are this Medicaid cluster, TANF, and CCDF. So let's talk about what things can my organization do to manage some of this risk that might be pushed down to me under potential new uniform guidance. So this has been a requirement since back in 2015, actually 2014 was when uniform guidance came out and became effective 2015 for most organizations. There are 5 areas where you must have written policies documenting how you are going to comply, payments and cash draws, procurement, including conflict of interest, allowable costs, including cost principles, compensation, how you're going to charge personnel and benefits to a particular grant, and how travel costs are documented. These are still the 5 required areas. That hasn't changed. At Rehmann, we've always recommended a much more expansive template for federal award policies, and that includes everything from how are we going to manage all of the compliance requirements like eligibility, special tests, and provisions to how are you going to do grant reconciliations. I think this is even more important with the risk where I see it moving from the federal government to the individual awardee to have written policies in writing for all compliance areas. And I'm going to talk about one of the main areas that we're seeing emphasis on, which is subrecipient monitoring. Subrecipient monitoring is a tough one. There are a lot of requirements, and they're all principles. And it's a principles-based section of uniform guidance, not a rules-based segment. With new potential uniform guidance, you might have some more rules about having to have written contracts and sub-awards. But there have always been principles and best practices. So let me give a brief overview of kind of how I see the best practices existing for a good system of subrecipient monitoring. First, have a policy. We're going to talk through in a second what I think the basic elements of a good policy look like. Second, have a template for subrecipient contracts. We get audit findings all the time for there wasn't a suspension in the debarment section of your sub-award contract, or you didn't specify the assistance listing number, or it wasn't clear that that sub-award was passing through certain compliance requirements. If you have a very detailed template that you work on with your auditor and with your potentially legal counsel for providing subrecipient contracts, and must be used for all sub-awards, you scope yourself out of some of that risk by including those required elements. Have a written process for monitoring subrecipients. So if it's not in your subrecipient monitoring policy, if that policy is a guideline, if it's higher level, write out that process for monitoring subrecipients and include in that written process a template for having written management decisions. We'll talk about this in a couple of slides in detail. When you have a sub-awardee that has a finding or a question costs, you as the granting agency, let's say you're a county, you sub-awarded to a city or a school district, they had a finding, you need to issue a management decision on that finding and what is the corrective action? Is that corrective action sufficient? And then put someone in charge of that system of internal control. Say, hey, we have a policy, we have a process, we have templates, we are going to do management decisions. Put someone in charge and say, hey, specific person, you are now responsible for operating this system of internal control for monitoring our subrecipients. Now, let's define a couple of terms really quickly. Sub-award, that's an award for the purpose of carrying out a portion of a federal award, creates a federal assistance relationship. A contract is usually what we call a vendor relationship. It's the purpose of obtaining goods or services for the non-federal entity's own use. It creates a procurement relationship with that contractor, not a sub-award, sub-recipient relationship. So they're kind of, when you're passing money, when you're spending money, sending it to another organization, you can do it as a sub-award or as a contract. When we're talking about sub-recipient monitoring, we're talking about sub-awards. That sub-recipient is receiving money and they're carrying out a program on your behalf. That the contract, the sub-award contract that you should have back and forth with that organization should specify what compliance requirements you're passing through, what program you expect them to run, and what the assistance listing number is for that entity. As we're thinking about subrecipient monitoring and management, we can think about that in a couple of different ways. Let's talk about some of the elements of what might comprise a subrecipient. If they're the ones determining who is eligible to receive federal assistance, they're doing the eligibility determinations, you're not as the granting agency, they're potentially a subrecipient. If they have their performance measured by whether the program objectives were met, that's an indicator that it potentially is a subrecipient. If that organization is responsible for programmatic decision-making, if they're responsible for adherence to federal program requirements, if they're responsible for using the federal funds to carry out that program as opposed to just providing goods or services, then they're probably a subrecipient. Now, if we go back a couple of slides here and we say, if we had those decisions made up front, we had a template for subrecipient contracts and awards, and we said, here's one for when we award goods or services contracts, here's one for where we award the right to manage a program. Maybe we've already made this decision by this point in the process. But if the contract that was made to that recipient is unclear, this is maybe the decision tree we would walk through to say, was that a subaward or was that a contract or relationship? Contractors, on the other hand, they're providing goods and services within normal business operations. They're providing similar goods or services to many different purchasers. They're providing services in a competitive environment. Again, they're probably going through an open procurement process, and they're not subject to the requirements of federal program. Compliance usually ends for contractors at the point where you award them the contract. You're not then responsible for that subaward and monitoring that subaward. Again, I think our next slide just kind of talks about that requirement ending once that vendor relationship has been established. Once you make that subawardee goes out, spends that money, and if they spend a lot of that money, $1 million or more in a particular year, they might need to have a single audit. Whether or not they have a single audit, you still have to monitor them. You can do that in a couple of essential ways. You review financial and performance reports. You can follow up and take timely action. You can perform during the award monitoring as applicable. And if they had findings during their audits, you would need to issue a management decision. That finding could occur as part of the independent auditor's report in a single audit. That finding could also occur during your desk monitoring procedures. Maybe you could take action even in advance of when your independent auditor determines that there was an issue. Again, these are just some of the requirements of pass-through entities, reminding us that the buck does not stop once you hand off that subrecipient award or contract. Now, I promised I would talk about a couple of important elements of a subrecipient monitoring policy. We're not going to have time today to go through all of those elements or requirements, but we can talk about a few of them. So, high level, a good subrecipient monitoring policy should talk about who is responsible for performing the monitoring, should talk about the performance of that risk assessment. So if you have a lot of subawards, you need to risk assess. You need to say which ones are we going to monitor more closely, which ones can we do a higher level of monitoring. We say we need to have a documented risk assessment process. It'll also explain what during the award monitoring activities will look like. That might be reviewing invoices against requests for reimbursement. It might also describe who the organization will monitor. And once that risk assessment has been done and you've determined we're going to monitor these 5 subrecipients, what those activities would be. Continued discussion of during the award monitoring, review of subrecipient reports and responses, and possible actions for deficiencies identified. Now, I'm going through this very fast. If you want an example of a subrecipient monitoring policy or you want to talk about your organization's system of internal control, more than happy to do that as follow-up to this presentation. When you're issuing management decisions, you need to clearly state whether or not the audit finding is sustained, the reasons for the decision, the expected auditee action, including whether or not they have to repay disallowed costs. If corrective action has not already been taken, a timetable for follow-up should be given. And then requesting additional information for context or describing if an appeals process has been made available to the auditee. Earlier on, we talked about my concerns around some of the lack of specific language in proposed uniform guidance and how those merit reviews and risk reviews might not have an established appeals process or a process for going back and forth between your organization and the federal government. Don't then do that to some poor subrecipient. Make sure that there is a chance for responding with context, for having an appeals process during that management decision discussion. In the same way, I, as your independent auditor, will attempt to have a clear and open conversation possibility for you to submit mitigating circumstances before I just issue a material weakness and say, hey, these are question costs. Again, all downstream entities must be sub-award or contract. So all downstream entity relationships should be in writing. This has always been best practice, but with the additional risk that the federal government is pushing down towards the grantees and the recipient organizations, it's doubly important this year and in future years. There's also this additional requirement that I promised to talk briefly about, which is evaluating internal transfers to departments or component units as potential sub-recipient relationships. What might that look like? Well, in uniform guidance, they define separate entities as separate legal entities. When you're doing a governmental GAAP financial statement audit, we're thinking about component units, funds, departments being special revenue funds. Broadly speaking, and this is my projection, right? We don't have specific language determining what this is, but my projection based on the existing language that I have seen is, let's say you're a county and you have a county clerk's office, a county sheriff's office, a fund of the county. That's probably not a separate legal entity. And if that fund of the county is managing those subawards, you probably don't have an issue with this new requirement. However, if you're sending money to a hospital authority, a housing commission, an economic development corporation, who might be reported as component units in your primary government's financial statements, they are a separate legal entity. You need to be considering having a subaward contract with a subaward agreement, subrecipient arrangement with that entity, and not just saying, hey, we're making a transfer to this component unit. Those are the situations in which you need to be really careful and put that relationship in writing. Can't just be an internal transfer between departments if it is a separate legal entity. Again, all subawards and contracts must be logged in SAM.gov. This is going to change from what we normally have been doing the past couple of years with FFATA reporting. You're going to have to submit all of that information into SAM.gov, which means you need to have a new level of precision that lines up with how you have your ledger transactions so that you're not submitting erroneous data to SAM.gov, because remember, we said they might potentially view this as a reason to cancel your grant. Have well-documented systems of internal control around what you are doing. I can't tell you exactly what might cause reputational harm. Not a lawyer. Also don't have a definition of this in uniform guidance that's been proposed, but it does mean document, document, document. At the very least, let's do all of the basics right and control what we can control. We want to have a well-documented management decision process. Establish and issue those decisions to subrecipients in a timely fashion. We already talked about this. So that brings us to polling question number 3. So I'll pause for a second here as well. All right, moving on to our last section. I apologize here. I'm probably going to run a couple of minutes long, but I want to talk about getting the basics right. We're continuing with the theme of getting the basics right. What are some common internal control deficiency areas that you can avoid just by having some good basic systems of internal control in place? So improper payments is always at the top of the list. Payments that shouldn't have been made, making the payment for the wrong amount, payments that don't have appropriate supporting documentation. This is a risk of fraud. And as we know, there's an area of emphasis on fraud for federal grants. So we have to be particularly careful when it comes to improper payments on federal grants. So some types of improper payments, you can have overpayments. We paid too much in excess of the amount due to recipients. You can make a payment to an ineligible recipient if you don't have a good award process, a good contract process. Maybe you didn't make all of those eligibility determinations before you made that award or that subcontract or that vendor relationship. Need to be careful, think upfront before you're sending out any payments. Payments for ineligible goods or services, or for goods or services not received, that goes back to our comments about cost principles, making sure you're only paying for allowable costs. Of course, duplicate payments are always a concern during an audit. We'll talk about some of the ways you can avoid making duplicate payments here in a second. So one thing we've seen a lot of in the last couple of years is the need to establish manual callback processes and implement verification of authenticity of changes. This is when someone is asking, an outside vendor, even a subrecipient is asking for changes to payment instructions, vendor banking details, payment amounts. Best practices are pick up the phone, call a trusted contact at that location, maintain detailed records of who you called when you called them. Best case scenario, you should have a payment process policy in place saying, here's what we're going to do to make sure that when a vendor or a subrecipient requests changes in their payment information, that we're sending that payment to the right place. I've seen people go high tech on this. I've seen them go low tech on this. I think picking up the phone is the best option. I've also seen some organizations implement like a dual factor authentication process for vendors or employees going in to making changes to payment information. Because remember, these could also be payments to employees that you're making for salaries that are going to the wrong place. I've also seen organizations go low tech and make trusted contacts physically come into the office and meet with them if they want to change banking information. Also very effective. Another concern you could have lack of segregation of duties. Again, basic financial statement controls, but also apply to federal grants. You could have a lack of checks and balances because the same person is initiating, approving, and recording transactions. You could have payroll processed and approved by the same individual. Those would all be areas of concern. So how do you address those areas of concern? You ensure that no single individual has control over all aspects of an individual process. You make sure you have a documented system of approval and authorization. Sometimes we might call that an audit trail or a workflow. Payment initiation and execution should be separate. Should have careful access controls. Maybe that's by having an actual AP system like S&P Concur. You need to have reconciliation and review on the back end. Simply doing bank recs on time, timely, and carefully managed is a control that will flow all the way through your financial statement audit, all the way down to your federal awards audit by making sure that payments are going to the right place and that they're being reconciled against your bank accounts, that they're fully accounted for in the ledger. We've also seen some issues with weak controls over federal reporting. That could be a report being submitted late. That could mean the report containing errors of information. That could also mean that there is no review process. And this, for me, is an area of emphasis over the last 2 years because I've seen a lot of it, where reports are getting submitted and there is not a approver and a preparer signing off on that report in some fashion. You need to be able to show that that report was reviewed. We all know that the classic approval control is a signature on that report from the manager of the person preparing the report, that report is ready to go. If you have a workflow system, maybe you establish cover sheets to show who is approving and who is preparing that report, but you need to have a review process that is documented to show that report is complete and ready to be submitted before it gets sent up. You can also see non-compliance with procurement standards. Sole source contracts are a big risk area for this. You're saying, hey, we're just going to use this vendor because we think they're the best or because we think that they're the only vendor that can do this. If you're going to sole source something, you better be very, very sure that competition is inadequate, that they are the only vendor that can do it, and you better document how that decision was made at the time you're making that award, not later. We made the award. Oh, yeah, we're going to go back and say, oh, we think they're appropriately sole sourced. No, at the time they're making that award. And this is a high risk area. Maybe think about bringing in your auditor. Maybe think about just having the discussion with legal counsel. Don't just sole source a contract and say, oh, only they can do it. That's a high risk area for audits and will be a high risk area for subrecipient monitoring under new uniform guidance. Could also be missing some type of price or rate analysis for purchases. Federal regulations mandate that you do perform rate analysis. That gets to our next slide. What do I mean when I say rate analysis? Well, we're talking about conducting purchasing in a manner providing full and open competition. There are potentially, at Rehmann, we've long called this the bear claw. What we mean is there are 5 acceptable methods of procurement under uniform guidance. Purchases falling under $15,000 are called micro purchases and need only be reasonable. Small purchases, those under $250,000, you must obtain price quotes. Informally, we say that usually means about quotes from about 3 different sources. Over $250,000, federal regulations require that you have sealed bids, competitive proposals, RFPs, and of course, your last possible area is you could sole source something. But again, high risk must be documented. Your organization's procurement threshold might be lower than this in any number of areas. You might require an RFP for anything over $25,000. That's absolutely allowed. You can definitely do that. You just can't have a threshold for federal grant purchases that is higher than any of these thresholds. So it can be more restrictive. It just cannot be less restrictive than a uniform guidance in these areas. Also, problems sometimes with inadequate time and effort reporting. Make sure you have a system of control, whether that's we require employees to submit timesheets, whether that's a semi-annual certification, maybe that's a cost allocation that we perform at the beginning of the year and then go back and measure at the end of the year against time and effort. In my opinion, best system of internal controls is having reviewed and approved timesheets where you charge federal grants based on the actual hours worked each period, and then employees have to code their time specifically to that grant. That's the easiest to audit and the least risky in my personal opinion. Of course, you also have to think about preventative versus detective controls. We like preventative controls. They help us avoid that event before it occurs. When we're talking about improper payments, we're trying to have preventative controls for the most part, not detective controls. A bank reconciliation is a detective control. We might find an issue after the fact. We do our reconciliation 6 days after month end, 2 weeks after month end, what have you. That's a detective control and not a preventative control. We want to prioritize mitigating that risk of fraud through primarily preventative controls where we can. And of course, IT and access controls are important. We don't want to share login credentials. We want to have regular user access reviews. We want to make sure that there are change logs in place. If you are changing someone's access, that we can see how their access got changed and why. These are also important internal control compliance components that could apply to your single audit as well. I'm going to skip over this slide. We're just going to talk about some other common deficiencies and then we'll close out for today. One issue we see sometimes is a control is not designed at a precise enough level that it would detect an error or an issue. So here's an example. Management says we review financial reports on a monthly basis. That's a good control. But if you don't specify what is the variance level at which we look at specific line items, who should we escalate that review to if there's a deviation? How did we document what was an acceptable deviation from our expectation? That control is less effective. Also, when we're thinking about design of internal controls, you want to not just identify a process, but you want to identify what the control is. So if you tell me my control is that we enter vendor invoices into the accounting system for payment, you are telling me what happened in the process. You are not telling me how you are preventing and detecting errors or non-compliance. So if instead you tell me the supervisor reviews and approves all vendor invoices over $5,000 for liability and budget compliance and evidences that approval retained in the system, now you have specifically identified and documented who, what, when, and that is good audit evidence. Finally, as we wrap up here, thinking about documentation as a whole, you want to have good documentation that is foundational about how controls are understood, executed, and evaluated. That means the documentation should start with policies and procedures that define who does what, when, and how. You want to support ownership in clearly defining roles and responsibilities. That goes back to everything I've been talking about assigning a responsible person for systems of internal control. You want your documentation to lend itself to review. You want to have effective training and tools when you change your processes and procedures. People are trying to turn over all the time. You need to maintain that system of internal control that make sure that policy is being followed throughout your succession planning, throughout your employee turnover. And of course, documentation is an audit trail that can help you defend your actions both to me as the external auditor for your independent audit and also to the federal government if they are performing a risk or merit review. With that, I think that brings us to our final polling question here. As we answer the polling question, I'll take us to our last slide here, which is where you can find us, additional resources. If you enjoyed today's webinar, you can scan the QR code here on the screen for additional webinar resources. We've just published a new article on the 17th talking about a lot of the things that I covered here today in the webinar in more detail. Please go out to our website, find that article, you can read it. We're going to have more on-demand content available from things we've done in the past. Not going to. We have on-demand content available for the webinars we've had this year. And we have an upcoming webinar on proactive cybersecurity in the public sector coming up on October 14th. You can catch me at the MGOFOA conference in the fall and at the MICPA Government Auditing Conference in December. With that, thank you very much for joining us today. Hope you enjoyed and found some of this practical and helpful to your organization.